markets dropped to 7221. The economy is not as good as where it was before. What's next for the PSEI? Where is it headed? Check this video out. So let's talk about the markets. But before that, if you're new to this page, you're new to this channel, subscribe, like, join us so you get updated on what's happening. Because the heart and the goal of why I do these videos is to educate you so that you see more and more and more Filipinos make money from the markets. That whatever you see outside, you disregard that. Make life, you trade, you invest, and live life at your own terms, because no one will take care of your financial future more than you. So it's time to take charge. It's time for you to live life, to trade, to invest, to do business, and do things at your own hands, at your own pace. So now, let's break down the markets and what has been happening. Please remember this, over the past few months, I've mentioned that the market is still bearish. It hasn't really fully reversed yet. It's still headed down because we don't have any reversal signal yet. That's why the trend is your friend. If it's not telling you that it's in an uptrend yet, it requires a discipline for you to, hey, stay in the sidelines first. And I don't know if you know this, there's been heavy amounts of foreigners taking out money in the country already. I think year to date it's around 75 billion pesos already, or roughly around 1.5 billion US dollars. That's a heavy amount of foreign selling, something that we haven't seen, I think, for the past decade alone. So what's triggering this? If you haven't seen the previous videos, a lot of things are now spiraling into something that's brewing into a not so perfect storm for our economy. I think everything is hinged right now in inflation. The 6.4% inflation is what's pushing our markets lower. It's removing any compelling reason for investors to buy our markets. Please remember this, in spite of the markets dropping at 7,200, we're still more expensive than our peers in this region, meaning we don't have a story that will cause people to buy higher. So why will they invest now if we're not as cheap as other peers in our region? So 6.4%, you have to factor in the storm that happened the past month, plus the new storm that hit Cagayan and the northern provinces of Luzon. You put that all in, I think inflation could probably hit 7.4. If it hits 8, it's something that's already double the higher end of the range of the PSP. With that, also, it will spiral down to our GDP. Our GDP at 6% is down because consumption is also down. So with inflation going up, you can expect consumption to go lower over the next or over the third quarter disclosure of the GDP. So the GDP is not anymore in the range of what's projected. The GDP also is not as exciting, not as compelling for investors to come in. Then you have inflation that's high. Then you have the interest rate. If you've been following the previous videos that I've mentioned, that if the interest rates go up, the stock market becomes less compelling to a lot of investors. Why? Why would you want to invest in the market if you can get a fixed set of returns from fixed income instruments as well, which people are now anticipating to go relatively higher also. So you have that scenario, plus you have the trade war, which takes out a lot of money from our markets because there will be a flight to safety. People don't want to position yet, and they're waiting to see how it transpires, how it goes. Then you have the effects of the US dollar, which I think, for those who watched the previous videos, I think it will hit 55 against the greenback against the US dollar. So you get that the US dollar goes to 55. Some are even projecting that it will go to 58. But let's cross the bridge when we get there. What I believe as of this point in time, you have a resistance at 55. So if it breaks past 55, probably there's a shot that it goes to 58. But let's see what happens when it goes there yet. But as of this point in time, I'm pegging it at 55. Even if it goes to 55, again, it will hit importers. As it hits importers, it won't be as good again for inflation, which will be a ripple effect to everything. Plus, oil is pegged to go higher still. The higher oil will go, it doesn't look so good since we buy oil at the dollar, it doesn't look so good for inflation. So This again also hinges on the fact that trade law increased all of this, so from sugar to oil, which is also it's not the sole reason why things are not so good, but it contributed to what's happening, to what we're seeing right now. So with that, this is where the index is. I believe you have the index reconfirming itself that it's bearish. You have the MACD price and momentum oscillators denoting a change in direction downward. But above and beyond the change in direction downward, you're seeing it becoming more bearish. You're seeing it having a lack of conviction to have an upward push as well. You see RSI being oversold, meaning bears are now pushing forward, pushing strong at a much faster rate. So with that, I'm placing our support again as close as 6975. I repeat, I'm placing our support as close to 6975, or probably you can peg it somewhere around 7,000 already for at least the short term. So we haven't reversed. You're still seeing a massive resistance at 79 and 81. That's what actually triggered the market. So when we were closing to 79, we really haven't broke past that. Hence the movement down. Then we failed to hold 75. Then now we broke down from that level, pushing us to have a shot to go down to 6975. So if we go down to 6975, I believe that our movement will possibly be 6975 to 7483 or 75 over the short term. If 6975 does not hold, the retracement may bring the stock or the PSEI down to 6721 to as low as 6470. But before it goes to 6470, it could possibly hit 6721 first, which we visited last year as well. We hit 6721 somewhere around January 2017, and we hit 64 around December 2016. So it wasn't so long ago when we hit those numbers. Now, given that this is happening, for those who position at the top, revisit the stocks that you bought. If you're an investor, make sure that those stocks are fundamentally sound. If they're basura stocks, they don't have any value, please, it's not worth holding basura stocks. It's not worth holding stocks without any fundamental value if you're an investor. And also, when foreigners start to come back in, large cap stocks, large funds start coming in, they won't buy the basura stocks. They'll buy the battered stocks with amazing fundamentals. So if you're an investor and you're holding a stock that doesn't have any value, cut your loss, get out. Do not hold something without any value. Now, if you're holding a stock that's amazing, revisit, especially for those who attended our Stock Smart sessions, revisit our fundamental analysis. If the fundamentals at this point in time dictates that nothing has changed towards its value, meaning they're still good, growing, but now they're cheap, go back to our valuation models, go back how we compute for the value of the stock, go back to our valuation ratios. If it becomes cheap at that point in time, by all means, buy as cheap as you can, put as much as you can. Now, if you're a trader, a lot of stocks, and for those who follow their stocks by request, we've seen BPI, Metro Bank, a lot of our banking stocks start to break down still. You can follow that model. Stocks that are breaking down, you are a quick trader, stay out of it first, stay in cash, wait until we see a solid support. For position traders, since we really haven't reversed yet into an uptrend, please also stay away. It's tempting to buy stocks when we think that, hey, it can look a bit cheap, but if it's not as attractive, it's not as good yet, the charts are not dictating any buy signal, stay away first. And what if you're losing money? Please remember, of course, it hurts to lose money, but use this as tuition fee, use this opportunity that always ask yourself, what can I learn from this? What can I tweak from my trading style? Did I just buy based on hype? Did I buy based on the hope of making money? Because if you're buying based on the hope of making money, guess what? You'll lose money that way. It always has to be technicals or fundamentals that should dictate your trading plan. And that's where money is made. When you follow your plans, you follow your rules, and you do that over and over and over and over and over and over again until you reach your goals of financial freedom. So that's it for now. I'm excited though. I'll be traveling again. If you've noticed, this September I've been mostly in Manila, but it will kickstart with my birthday. I'll be in Batayan. For those who are in that area, I hope to meet you, but October will be an action-packed month. I'll be in General Santos City, and then I'll be in Qatar. Then, aside from General Santos City and Qatar, I'm flying to Cebu at the end of October as well. Then, in November, it will be even more action-packed because we will be in Dubai, Singapore, Davao, and also Taiwan. And Please don't forget about this. October 13, I'll be in Icon 2018 Davao. It will be the largest investment conference in Davao City. So that's it for now. What did you learn from this? What stocks do you need to cut? What will you change from your profile? I want to hear about it. Comment below so I can help you and I can address it. I can answer some questions about it. And later on, I hope that it helps you build a conviction in trading the markets with confidence. So this is Marvin Gerbo back in BGC. I hope this video helps you trade well, trade strong, trade smart. See you all again soon.